Welcome to this month's Market Update. I'm here again today, as always, with Alexandra Veroude, a senior member of Frontier Advisors, Capital Markets and Asset Allocation Team. Hi there, Alexandra.
Hi, Wayne.
So global markets have been pretty positive through the month of October, I guess off the back of some positive corporate earnings news, the US and China starting to get together and having some positive dialogue as well. Why don't we start with global equities markets? How do they perform through the month?
Yeah, as you mentioned, Wayne, the US and Chinese presidents, they met at the end of October, and this saw some tariffs being reduced and some of the restrictions lifted around critical minerals exports. And this really helped to support investor sentiment. And as you also mentioned, those positive corporate earnings and generally robust economic data. We saw gains in US equities. They were driven by earnings and optimism around AI, with some positive results from Amazon and semiconductor companies. European equities also advanced, supported by their chip maker ASML and general broad-based large-cap outperformance. Japan, however, was the standout performer, with equities there surging on the back of fiscal stimulus expectations following the appointment of Prime Minister Sanae Takaichi and her pro-growth stance and commitment to infrastructure and defense spending improved investor sentiment.
Okay, so moving on from those large developed global markets, how about in Australia and the emerging markets as well? How was the performance there?
We saw Australian equities, they posted a small positive return. There were idiosyncratic factors which weighed on some of their individual large names, but we saw resource stocks were strong as commodity prices increased, with copper and gold prices rising materially, and that boosted those related companies. Emerging markets delivered strong returns, and this was led by Korea and Taiwan, which were benefiting also from the AI theme. However, Chinese equities declined, reflecting weak domestic demand and a broader pullback following that strong year-to-date performance that we have seen.
Okay, so thinking maybe more on the defensive side with bond markets, the US Fed, are pushing rates down a little. What was the market response then?
Yeah, so we saw the US Federal Reserve, they cut rates at the end of October, and it also announced that its balance sheet reduction program would end in December. It does remain cautious on signalling a set path ahead, given that the challenges that the government shutdown prevents for assessing economic activity. Chair Powell likened the current situation as driving through the fog, which forces you to drive more slowly than what you would otherwise. Bonds posted moderate gains globally as yields declined slightly over the month, but bond markets are really awaiting a clear signal from the Fed or clear direction on US economic activity. In Australia, we saw inflation data came in higher than expected, which caused a reassessment of interest rate expectations and the Reserve Bank of Australia to pause its easing cycle as it assesses whether this inflation uptick was due to temporary or more persistent factors.
Okay, so moving from bonds along to currency, the US dollar, the decline there has halted a little.
That's correct. We're seeing currency markets being impacted by divergent economic outlooks. The US dollar strengthened on relative economic strength, and we saw some weakness elsewhere. The Japanese yen performed poorly, and this was impacted by the Takaichi government's fiscal stimulus agenda and questions around the ability for the Bank of Japan to hike rates. The Australian dollar depreciated against the US dollar, but appreciated elsewhere against other major currencies on that commodity price strength.
Okay, so why don't we round out the conversation today with a quick look at real assets?
Yeah, we saw Australian listed infrastructure and property posted small positive gains, supported by resilient domestic demand, while global listed infrastructure and property declined slightly.
Okay, so plenty happening, mostly positive for investors, but we'll certainly keep a watch on that over the coming months. Thanks for your update, Alexandra, and thanks for watching this month's Market Update.